Good morning. Good morning. Sure you're having a great time. Good morning. So excited to have you in today's session. Has been trading. Hope it's been profitable. My has been profitable. This week has been a very profitable week for me, and I hope it's the same experience with you. So how you doing? How you doing? You're welcome. You're welcome. If you have any question, please drop it in the comment section. If you have any pair you want us to analyze together, drop it in the comment section. You're welcome. You're welcome. We're not gonna waste much time in today's session. We'll go straight to business. Okay. So as you know, we'll start looking at the with the major currency pairs. Okay. So let's start with Australian dollar USD. If you attended the weekly outlook session, I told you guys my bias for Australian dollar USD, Euro USD, GBP USD, and NZD USD is bearish. That's my weekly bias on those pairs. Okay. And yesterday I saw opportunity to buy Australian dollar USD, and I made good profits yesterday on Australian dollar USD, and I'm out of Australian dollar USD, though the trend is still bullish. Okay, so let me tell you why I bought. Now, last week I told you guys why my buyers for this week is bullish, and that's because we had several bearish bullish reversal pattern here. You can see we had a spinning bottom, we had an hammer. This tells me that the buyers are showing up strong in the market. Okay, and that's the reason my buyers for the week has been bullish for the past 2 weeks now. My buyers on Australian dollar USD has been bullish. Okay, so let's see how last week candle closed. You can see how last week candle closed. It looks like an hammer, though not a valid hammer, right? But let's see the pattern we have on 4 hour. Okay, so after the close of last week candle, what I do is go down to the next lower time frame, which will be the daily time frame. Now if I go down to daily time frame and I'm able to identify a bullish reversal pattern on the daily time frame, that tells me that the trend for the week is bullish. Okay, so let's go down to the daily time frame. What do we have on the daily? So you can see on the daily time frame, this was um Thursday candle, right? Yeah, this was Thursday candle, last Thursday candle, and you can see how it closed. It closed as an inverted hammer. This tells me an inverted hammer indicates change in trend, right, from bearish to bullish. An inverted hammer would always form in a downward trend. When it forms in a downward trend, you look out for opportunity to buy. Okay, so when I came down to daily and I saw this inverted hammer, and you can see the next candlestick that closed after this inverted hammer, which was on Friday, closed strongly bullish. That tells me that we have a lot of buyers in the market. And so this week, I should be looking out for buy opportunity. So yesterday, you would see that was on, this was Tuesday. Yeah, this was Tuesday candle. You can see how that candle closed. It closed as a doji, right? It closed as a doji after liquidity was clear at this previous low. The candle closed as a doji, indicating change in trend from bearish to bullish. So after the close of the candle on that was on Tuesday, right? Yeah, Tuesday. I went down to lower time frame. That's on the next lower time frame will be 4 hour. Now on 4 hour, I should be able to identify a bullish reversal pattern on 4 hour time frame. So let's go to 4 hour. Sharing with you why I bought Australian dollar USD yesterday. So I should have left the trade, but at least I made some good profit and I'm out of the trade. So you can see the pattern we had on 4 hour after the close of that doji on the daily time frame. That doji that formed on Tuesday. You can see the pattern we had there. We already had a bullish reversal pattern on 4 hour time frame. This is a confirmation that we have buyers in the market, and that will be the right time to buy. So I took a buy yesterday. I made close to 60 pips, and I'm out of the trade. Okay, now Australian dollar USD is still bullish, but I will not advise that you buy at the current market price. Buying at the current market price, is at a very high risk. Yes, price has a high probability of going up, but personally, I wouldn't be taking a buy at this current market price. The risk will be too high, because if I decide to buy at this point, yes, I can decide to set my stop loss around this level, but it will be very risky. They can easily enter my stop loss at this level. So if I'm buying from this current market price, My stop loss will be around this level, and to me that risk is too high. That's about 90 pip risk. It is too high. So it is very important that you know the best time to execute a trade. Entering or catching the trend at its early phase would help minimize your risk and increase the profit potential on that trade. Okay, so for me, entering a buy on Australian dollar USD is at a very high risk. What I will advise that you do is wait for price to pull back. Okay, wait for price to pull back before you execute a buy trade on Australian dollar USD. As you know, today we are expecting a major news from the United States, and tomorrow is NFP. Okay, so if you don't have any trade on Australian dollar USD now, wait for price to pull back. Wait for price to pull back before you buy Australian dollar USD, unless you are comfortable with the current risk. Okay, unless you are comfortable with the current risk. Patiently wait for price to pull back if you are not in a buy trade already on Australian dollar USD. I hope that is clear on Australian dollar USD. Australian dollar USD is still bullish. It is still bullish. I hope that is clear. Okay, let's move to the next pair. Australian dollar JPY is bearish. Australian dollar JPY is bearish. Mr. David, I shared this with you, I think 2 nights ago during the Zoom session, right? Australian dollar JPY is still bearish. I think I have a trade on Australian dollar JPY. It is still bearish. Okay, Australian dollar. So let's start with the weekly. Why my bias on Australian dollar USD is bearish. Let's see weekly time frame. Let's start with the weekly time frame. Okay, so you can see how last week candle closed. It closed strongly bearish. You can see it's closed strongly bearish. Now, what played out here on Australian dollar JPY on the weekly time frame? Now, you would see there's a breakout from a resistance here, right? Now, when there's a breakout from a resistance, what would most retail traders do? Most retail traders would what? Would sell, right? No, most retail traders will buy because they will see this as a valid breakout because the body of the candle closed above this previous resistance level. That tells me that demand is higher than supply. Then I should jump in. So a lot of retail traders will jump in and start buying. Now, if we have a lot of retail traders who are willing to buy above this resistance, what do you think the institutions will do? They would sell. The institutions will sell. Okay, so now another reason price had to break out from this resistance that you see here is the liquidity that was residing at this previous highs. That was why price broke out from this resistance. You can see that they had to clear liquidity at this previous highs. Now, after the close of this candle, what happened last week? Price now pulled back and closed below this resistance. Remember, this resistance became a support after this candle broke out, right? Then there was a strong pullback from that level. Now this level became a resistance, right? Because this candle closed below this demand level. I hope you're getting me. When this candlestick broke out, this resistance became a demand or a support. Now, this next candlestick, last week candle, now closed below this demand level. That tells me that supply now exceeds demand. And I understand that the reason price broke out from this previous resistance was the liquidity residing at this previous high. So based on how last week candle closed, we could tell that there are a lot of supply. There are a lot of sellers in the market. Okay, the numbers of sellers exceeds the number of buyers, and when number of sellers exceeds number of buyers, we expect price to drop. Okay, so that's why my bias on Australian dollar JPY this week was bearish. And if my weekly bias is bearish, any trade I'm going to execute on the lower time frame, be it 4 hour or 1 hour time frame, must align with the weekly trend. It must flow with the weekly trend. You know, if the weekly trend is bearish, long term is bearish, we could still see some bullish pullback on 1 hour time frame, sometimes on 4 hour time frame and 15-minute time frame. There will be bullish pullback. There were people who bought Australian JPY, I think on Monday or Tuesday or Wednesday, they made some good profits. Depends on the strategy they are implementing in the market. Okay, so let's go down to daily. So on daily, what played out yesterday? Now, Let me tell you what played out, what has been playing out on Australian dollar JPY. Now, this was the Monday candle, right? This was Monday candle. Now, after the formation of this Monday candle, you would agree with me that a lot of retail traders would have executed a sell trade on Monday. A lot of retail traders would have executed a sell trade. Why? Now, um, the reason retail traders would have executed a sell trade, let's go down to lower time frame. After the formation of this candle, now this candle looks like an inverted hammer, right? It looks like an inverted hammer, and when a retail trader sees this, he considers selling. So let's go down to 4 hour after the close of that inverted hammer. Let's see the pattern we had on 4 hour. So can you see the pattern we had on 4 hour after the close of that inverted hammer? We had a spinning top, we had shooting star, we had shooting star, we had spinning top. Can you see that? Then this next candle closed bearish. Can you see that? So a lot of retail traders, based on this pattern we have here, would have executed a sell trade, right? And where would they have their stop losses? Their stop losses would be at this high or a few pips above this high. What happened? Yes, those who took a sell after the close of this candle, yes, they would have made some good profit. But those who are still holding the sell trade, those who are still holding sell trade and have not closed profits, their stop loss at this level. So what played out yesterday was the hunt for stop losses at this level. That's what played out yesterday. The institutions came in and pushed price up to sweep liquidity at this previous high. So what played out after they swept liquidity at this previous high, what happened? The next candle that formed was what? A spinning top. Can you see that? Which indicates change in trend. So this would have been the best price to start selling Australian dollar JPY. And you can see where price is at the moment. You can see where price is. This is where you should have entered a sell trade on Australian dollar JPY, and price is currently at this point. So calculate the risk. If you decide to sell at the current market price, the risk will be, okay, this should have been your entry, 98.06 and 97.4. That's about 60 pip risk. 60 pip. The risk will be as high as 60 pip risk. And for me, that risk is too high. So I will not advise. Yes, there's a high probability that because we have a lot of areas of liquidity here, we have stop losses at this level. There's a high probability that they will hunt for these levels. Okay, they will push price below this level, but you don't want to be aiming for this level as your TP and your stop loss is at 60 pips, because if you look at the difference from this point to this point is less than 20 pips. Is less than 20 pips. You cannot be risking 60 pips and you are aiming for 20 pips. That is not a good risk reward. Okay, so would it be right? Would it make sense to sell Australian dollar JPY at the current market price? For me, it's a no. It's a no, because I'm considering the risk and the reward. It does not make sense, right? So it will not be appropriate. It will not make sense to sell Australian JPY at the current market price. If you are considering selling, I would advise you wait for price to pull back. Wait for price to pull back, then you look for another good opportunity to execute a sell trade. Like I said, it is still there's a high probability that price will still push down. It's still going to drop. Okay, so if you want to take the risk, this is what I would advise. If you want to take the risk, to sell Australian dollar JPY, if you are entering at the current market price, your stop loss should be the high of this bullish candle. It should be the high of this bullish candle. So what would that be? 97.48. 97.48 stop loss will be the high of this candle. That would be 97.86. That's like 40 pips. 40 pips. Okay, so you can risk 40 pips. If you want to take the trade, you can sell, set your stop loss using the high of this candle. Then your take profit should be around 60 pips if you want to take the risk. But personally, I would have waited for price to pull back before I will sell. So where would I want to see price pull back to on Australian JPY before I sell? I want to see price pull back to this level. You can see this zone I identified here. I want to see price pull back to this zone or pull back to this broken support, which has become a resistance. That will be the best time to execute a sell trade. Okay, price should pull back to this zone or pull back to this previous support, which has become a resistance. I hope that is clear on Australian dollar JPY. I hope that is clear. Okay, let's move to the next pair on GBP USD. I can see Mr. David. I can see Mr. Eze. Okay, you're welcome. Welcome. Please, I want to see your comments. I want to see your comments. If you have any question, please drop it in the comments section. Okay, so let's move to the next pair. GBP, someone said we should look at, okay, Mr. David, GBP USD. Let's look at GBP USD. GBP USD should be bearish or, no, sorry, bullish. GBP USD is bullish. Let's start with the weekly time frame. Okay, so we use the weekly time frame to know the trend for the week. So you would see that GBP USD has been in a range for some time. It has been in a range for some time, okay? And a lot of traders would have executed sell, 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 because we have a lot of bearish reversal pattern here, and their stop losses will be at these highs, you can see. So I think at the moment, there's a high probability that GBP would hunt for the stop losses, okay? We want to clear liquidity at this previous high. That's my take on GBP USD. GBP USD, my bias for GBP USD this week is bullish. It is bullish, okay? So last week candle, you see how last week candle closed? It closed as a spinning top, right? It's closed as a spinning top, but before the formation of this spinning top, what pattern do we have here? We had an hammer, we had a spinning bottom, and this next candlestick closed bullish. So this tells me this is a bullish reversal pattern, and you can see where this candlestick formed. You can see where all this hammer, you can see, if you go back here, you will see there was a support here. So price tested this support, you can see, and there was a strong rejection from that level. That tells me that the buyers are showing up strong in the market. And you can see price has been bullish after the formation of this pattern here, okay? So let's go down to, so after the formation of last week candle, because we use last week candle to determine the trend for this week, right? So after the formation of the last week candle, I apply my my vertical line, okay, so that I can switch down to daily time frame to see the pattern that formed last week. So I'll go down to daily. Let's see the pattern that formed last week. Okay, so this was last week candle. 1 2 3 1 2 3 4 5 6. Okay, this was the candlestick that formed last week, okay, on the daily time frame GBP USD. So you can see the pattern we have here. This pattern we have here, this looks like this is an inverted hammer, a bearish inverted hammer, and the next candlestick that formed was a bullish candlestick, which indicates that the buyers are showing up strong in the market. Now, another thing I also work with is the high of this bearish candle, this last bearish candle. You can see the high of this bearish candle. I also like to work with the high of this bearish candle that formed before this bullish candle. And you can see at this point, this candlestick broke out from this high. This tells me demand has exceeded supply. You can see this level was a previous, can you see? This level was a previous support. Can you see? Support, stone, resistance. You can see that. You can see how it's played out here. You can see the reason for this pullback. The reason for this pullback was the high of this candle and also this previous support, this support level. Can you see that? That was the reason for pullback. And you can see how price sat on that zone. You can see it. So that's the reason I said this week my bias is bullish. You can see that. And it has started buying since on Monday. It's been bullish since on Monday. GBP USD has been bullish since on Monday. And I think it's still going to be bullish for the week. Okay. The only thing that will make it sell could be fundamentals. Okay. This week is NFP week. A lot of major news will be released this week from the United States. That is the only reason GBP USD is going to sell. Technically, GBP USD is bullish. It is bullish. Now, personally, I would not be taking a buy trade on GBP USD because price has moved far from where I ought to have entered the trade. Price has moved far from where I should have entered the trade. I should have entered buy after the close of this was Monday candle. Yeah, I should have entered buy after the close of Monday candle. So the market is currently I think how many pips? About 40 pips above my entry level. 40 pips above my entry level. So I want to see price pull back, maybe I want to see price pull back to this zone. This is where I will consider selling. Sorry, buying. I want to see price pull back. As you can see, price just hits a previous resistance level. Price just hits a previous resistance level. That's the reason for this rejection. Okay, so I want to see price pull back into this zone. This is where I will consider buying. And if I'm buying at this zone, my stop loss will be around this level. That should be more than 40 pips. Okay, my stop loss will be around this level, which is about 40 pips. So I want to see price pull back to this zone. I think a major news will be released by 2:30 or by 4 p.m. After the news is released, if price pulls back into this zone, then I would buy GBP USD. I hope that is clear. I hope that is clear. Is there any other pair you want us to analyze? Let me know. Let me know. Drop it in the comment section. I hope that is clear. Can you hear me? Can you hear me? Can you hear me? Which other pair do you want us to analyze? Gold, like I told you guys during the weekly market analysis session, I told you guys gold is bullish. Gold is bullish. You cannot sell gold. Selling gold is at a very high risk. A very high risk. Gold, gold is bullish. It's quite unfortunate that I missed this gold move. I missed this gold move, though I knew the direction was bullish, but I missed it. I missed it. So gold is bullish. Gold is bullish. Okay, gold is bullish. Okay, gold is bullish. Let's start with the weekly. You can see gold has done over, I think, over 800 pips this week. Yeah, gold has done over 800, yeah, close to 800 pips this week. 800 pips this week. Imagine if you had executed a trade on Monday and you used, let's say, 0.1, you would have made close to $800. Even if you were using, if you had used 0.01, you would have made close to $80. But would you have the patience to hold the trade from Monday to Thursday? Most traders don't have that patience. Most traders don't have that patience. Okay, so a lot of people have made good money trading gold this week, and a lot of people have also lost money trading gold this week. Those who sold would have incurred huge losses, and those who bought are smiling. They are smiling. USD card. Okay, let's move. Let's look at USD card. USD card. USD card. Okay. Mr. Adamu, good morning. Good morning. Okay, let's look at Mr. Adamu says we should look at USD card and USD JPY. We should expect bearish move on USD card. Okay, USD card, you can see last week candle, you can see how it closed. It closed as a bullish candle. Okay, and you would also notice that we had a previous resistance here, and I think that was why we saw a little rejection from that level. Okay, so after the close of last week candle, the next thing is to go down to next lower time frame, which will be daily. So on daily time frame, we should be able to identify a bearish reversal pattern on the daily time frame. If we can identify a bearish reversal pattern on a daily time frame, that's a confirmation that the trend for the week will be bearish. So let's go down to daily. So you can see the pattern we had on daily time frame. You can see it's a bearish pattern, right? You can see this was last Friday candle. You can see the pattern we have here. This is a spinning top, and this is a doji, a bearish doji. So this confirms that USD card is bearish. Okay, so what happened this week? On Monday was bullish, Tuesday was bullish, and the reason for this bullish move you saw here was that the institutions, a lot of retail traders would have executed sell after the formation of these bearish patterns. And where would they have their stop loss? Their stop loss would be at this level. So the institutions had to hunt for their stop losses. You can see that is the reason for the bullish move we saw on Monday and on Tuesday. So on Tuesday, they were able to clear the stop losses. They were able to clear liquidity at this previous highs, where most retail traders will have their stop loss before, you see, they started pushing the price down. So after the close of Tuesday candle, okay, after the close of Tuesday candle, let's see the pattern we had on 4 hour. So you can see the pattern we had on 4 hour after the close of Tuesday candle. Can you see? We had an hammer, we had a spinning top. So a lot of several bearish reversal patterns formed on the 4 hour time frame. That was on after the close of Tuesday market. So on Wednesday, USD card went bearish. So it's been bearish since the open of the market yesterday. Okay, so I would not advise that you should sell now. You can see where price is now. This is where you ought to have entered the sell, and the market is trading how many pips below that level? That's about 80 pips below that level. 80 pips below that level. You don't want to be entering sell at the current market price because the risk will be too high and the reward will be very small. The risk will be too high and the reward will be very small. You don't want to take such trades. So if you want to sell USD card, this is what I advise. Wait for price to pull back. We have a fair value gap here on 4 hour. Okay, this is a fair value gap. Okay, so wait for price to fill this gap. Okay, or wait for price to pull back to this support which has become a resistance. These are the areas you should consider selling. Okay, if price pulls back to this resistance, support stone resistance, you could sell from that point. Okay, sell from that point, but selling from this point is very risky. If you want to sell from this point, okay, if you want to sell from this point, your stop loss should be at this level, which is about 80 pips. Are you comfortable with that risk? Are you okay with that risk? That is too high. So wait for price to pull back. There's a high probability that price will pull back. Okay, probably maybe the major news will drive it up that today, or NFP will drive it up tomorrow. So you wait for price to enter this zone, any of these levels, before you sell. Don't sell at the current market price. It's very risky. It's very risky. Okay, but Australian dollar JPY, Australian dollar JPY is still very good. It's still okay. I'd rather risk Australian JPY than risk on USD card. Okay, and that's because of the major news that will be released from the United States. Okay, so that is it on USD card. USD JPY is bearish also. It's bearish. USD JPY. Okay, you can see USD JPY is bearish. I shared this with you guys during the weekly market outlook session. It has been bearish, and this is not the right time to sell USD JPY. You can see where price started dropping. It started on Tuesday. It has been bearish since on Tuesday. So this is where you should have entered sell on USD JPY, and the market is currently trading about 200 pips below that level. So you have missed that move. Let it go. You have missed that move. If you want to sell USD JPY, we need to see price pull back, maybe to this support stone resistance. Okay, we want to see price pull back, or let's go down to 4 hour. Let's see on 4 hour. Okay, fair value gap was created here. Okay, so this fair value gap was created. You could also wait for price to fill this gap before you sell. So these are the areas I will consider selling USD JPY. The current market price is not a good price to sell USD JPY. I hope that is clear. I hope that is clear. I hope that is clear. Gold is bullish. Gold is bullish. I've shared with you guys. Gold is bullish. Don't sell gold. Though we might see a pullback on gold, but it's very risky selling gold. It's very risky selling gold. We could see a pullback, but for me, I think it's risky selling gold. Look for pullbacks, then look for opportunity to buy. Okay, let me USD JPY. What's it called? You can see Australian dollar USD is still bullish. It's still bullish. It's still bullish, please. It's still very bullish. Still very bullish. Australian dollar USD is still very bullish. Okay. If you want to buy, wait for price to pull back. You could apply your Fibonacci 2. Take it from this swing low to this swing high. Okay, take it to this swing high or this one. Then wait for price to pull back to discount before you buy. Okay. So that will be all for this session. If you have any question, let me know. That will be all. That will be all for this session. Any question? Any question? Any question? Please, if you are getting value from this stream, please like the stream, and it's if this is your first time participating in the live stream, please subscribe to the channel so that anytime I come online, you'll be notified by YouTube. And also, if you are not on the WhatsApp group, please send me a message so that I can add you to the WhatsApp group, because some of the informations I drop them on the WhatsApp group even before coming live. Okay, so please ensure you're on the WhatsApp group to be updates to get updates about what's happening in the market. Any question? Any question? Any question? If there are no questions, I would have to end this live session. I appreciate you guys for your participation. Today is on where today is Thursday. Okay, this will be the last session for the week, right? Today is Thursday. Right, today is Thursday. Okay, I come on live on Tuesdays, on Wednesdays, and on Thursday. I have not been available. I couldn't come online on Tuesday and on Wednesday because of my health issues. Okay, so that's why I wasn't available on Tuesday and on Wednesday. Okay, but definitely next week I will be on Tuesday, Wednesday by 10 a.m. Okay, you could also share the link with your loved ones. Okay, I hope that is all. That is all. Any question? Any question? Please, this week is NFP week, and like I've always advised, you should be conservative during NFP week. You should be conservative in a week where there are a lot of major news to be released from the United States. You should be very conservative. Don't take high risk. Okay, don't be aggressive when major news is expected to be released for the week, especially coming from the United States. So please be very conservative. Don't risk more than 1 to 2% of your capital on any trade. I hope that is clear. So thank you very much. I appreciate you all. Wishing you guys a profitable trading day. If you have any question, you can drop it on the WhatsApp group or you can DM me. Okay. Thank you. Bye for now.